Welcome back, my friends. The news today is that tech layoffs balloon in January as Wall Street rally lifts Alphabet, Meta, Microsoft to records. So far in January, some 23,670 workers have been laid off, the most in any month since March, according to the website Layoffs.yi. The downsizing comes at the same time as investors are becoming more bullish on tech. The Nasdaq is at its highest since early 2022, and Alphabet, Meta, and Microsoft have all reached fresh all-time highs. AI hiring frenzy to fuel layoffs in other tech segments as firms strive to balance costs. More than 20,000 tech employees have already lost jobs so far in 2024, according to tracker Layoffs.fyi. Layoffs will continue to happen for big tech in some areas, while the hiring frenzy in AI will be unprecedented as this arms race continues across the tech world, Dan Ives, managing director at Wedbush Securities, said. Google CEO Sundar Pichai last week warned employees there would be more job cuts this year as the company continues to shift investments toward AI. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. The S&P 500 is trading at a record, and the Nasdaq is at its highest in 2 years. Alphabet shares reached a new pinnacle on Thursday, as did Meta and Microsoft, which ran past $3 trillion in market cap. While Wall Street cheers on Silicon Valley, tech companies are downsizing at an accelerating clip. So far in January, some 23,670 workers have been laid off from 85 tech companies, according to the website Layoffs.yi. That's the most since March, when almost 38,000 people in the industry were shown the exits. Activity picked up this week with SAP announcing job changes or layoffs for 8,000 employees and Microsoft cutting 1,900 positions in its gaming division. Additionally, high-valued fintech startup Brex laid off 20% of its staff, and eBay slashed 1,000 jobs, or 9% of its full-time workforce. Jamie Iannone, eBay's CEO, told employees in a memo that we need to better organize our teams for speed, allowing us to be more nimble, bring like work together, and help us make decisions more quickly. Earlier in the month, Google confirmed that it cut several hundred jobs across the company, and Amazon has eliminated hundreds of positions spanning its Prime Video, MGM Studios, Twitch, and Audible divisions. Unity said it's cutting about 25% of its staff, and Discord, which offers a popular messaging service used by gamers, is shedding 17% of its workforce. The swarm of activity comes ahead of a barrage of tech earnings next week, when Alphabet, Amazon, Apple, Meta, and Microsoft are all scheduled to report quarterly results. Investors lauded the cost-cutting measures that companies put in place last year in response to rising inflation, interest rates hikes, recession concerns, and a brutal market downturn in 2022. Even with an improving economic outlook, the thriftiness continues. Layoffs peaked in January of last year, when 277 technology companies cut almost 90,000 jobs, as the tech industry was forced to reckon with the end of a more than decade-long bull market. Most of the right-sizing efforts took place in the first quarter of 2023, and the number of cuts proceeded to decline each month through September, before ticking up toward the end of the year. One explanation for the January surge as companies budget for the year ahead. They've learned they can do more with less. At Meta, in CEO Mark Zuckerberg's words, 2023 was the year of efficiency, and the stock jumped almost 200% alongside 20,000 job cuts. Across the industry, artificial intelligence was the rallying cry as new generative AI technologies showed what was possible in automating customer service, booking travel, and creating marketing campaigns. The AI hype raised concerns in many corners of the economy about the declining need for human labor as technology gets smarter. But it's having a more immediate impact on the workforce. AI demand is so great that some tech companies are cutting headcount in parts of the business to invest more heavily in developing AI products. These companies in general are reducing numbers of employees associated with product lines or divisions that have not been successful because they want to reposition themselves for AI, said Art Zeile, CEO of DHI Group, which owns the tech recruiting platform Dice. Zeile was quick to point out that the cuts we're seeing this January are far below the numbers from a year prior, adding that it's not the kind of news that it was earlier. Company execs choose different verbiage to convey their downsizing message to employees and investors. But the through line is that they're trying to become more focused. Microsoft Gaming CEO Phil Spencer said his company's layoffs were part of a larger execution plan that would reduce areas of overlap, a little more than 3 months after Microsoft closed its acquisition of Activision Blizzard. SAP said its restructuring is designed to increase focus on key strategic growth areas, in particular business AI. Alphabet CEO Sundar Pichai told employees in a memo titled 2024 Priorities in the Year Ahead that we have ambitious goals and will be investing in our big priorities this year. And that, to create the capacity for this investment, we have to make tough choices. And at Amazon's Audible unit, CEO Bob Kerrigan said, getting leaner and more efficient is the way the company needs to operate for the foreseeable future. Nigel Vaz, CEO of consulting firm Publicis Sapient, said that some companies are probably looking at the boon that Meta and Salesforce got after their hefty cost-cutting measures last year. Salesforce cut about 10% of its workforce in January 2023, and the stock ended up nearly doubling for the year, its best performance since 2009. Following Meta's announced cuts, the company's shares had their best year since Facebook debuted on the Nasdaq in 2012. I look at Meta and Salesforce as only two examples of companies that needed the impetus, Vaz said. The minute they got the impetus, then demonstrated what happens when you act with edge on stuff that you probably knew you needed to do. As tech firms prioritize investments into artificial intelligence and go on a hiring spree, other segments are likely to see layoffs continue into 2024, according to industry experts. More than 20,000 tech employees have already lost jobs so far in 2024, according to Tracker Layoffs, FYI. Google and the rest of big tech are betting big on AI while cutting back on non-strategic areas. Layoffs will continue to happen for big tech in some areas, while the hiring frenzy in AI will be unprecedented as this arms race continues across the tech world. Dan Ives, managing director at Wedbush Securities, told CNBC. Google CEO Sundar Pichai last week warned employees there would be more job cuts this year as the company continues to shift investments toward AI. We have ambitious goals and will be investing in our big priorities this year, Pichai wrote in a January 17 memo to employees, adding that the management was gearing up to share its AI goals and objectives for 2024. The reality is that to create the capacity for this investment, we have to make tough choices, Pichai said. Google slashed hundreds of jobs earlier this month in its push for efficiency and to focus on its biggest product priorities, as it plays catch-up with rival Microsoft, which has integrated ChatGPT into Bing search and prompted Google to beef up its search engine with AI features. AI investment could cause more job cuts across big tech, says Alex Kantrowitz. We're not living in a zero interest rate environment anymore, and now they really need to find ways to cut costs so they can invest here. Training AI, deploying AI is very expensive, and I think that's what's happening with Google today, said Alex Kantrowitz, big technology founder, last week. That is something that I expect other big tech companies to follow, said Kantrowitz on January 18. German enterprise software firm SAP on Tuesday announced it would restructure about 8,000 roles to increase its focus on key strategic growth areas, in particular business AI in 2024. The majority of the approximately 8,000 affected positions is expected to be covered by voluntary leave programs and internal reskilling measures, the company said, adding that headcount should still be the same by year-end. Amazon, which has been aggressively investing in AI, laid off hundreds of employees in its video streaming and studio divisions earlier this month. Jobs were also cut in its Twitch live streaming platform and Audible audiobook unit. Mike Hopkins, who oversees Prime Video and MGM Studios divisions, said that the firm has identified opportunities to reduce or discontinue investments while increasing investment in other areas that deliver the most impact. Amazon Web Services, the e-commerce giant's cloud service business, said on January 19, it would likely pump 226 trillion yen, $15.24 billion in Japan by 2027 to expand cloud computing infrastructure that is key for AI services. Amazon Web Services is designing its own chips to catch Microsoft and Google in generative AI. Despite cementing its position as the world's largest cloud provider, AWS was slow to the generative AI race, only releasing its large language model Titan months after Microsoft's reported $13 billion investment in ChatGPT maker OpenAI and Google's release of AI chatbot Bard. The layoffs aren't limited to the tech industry. Other companies too are looking to cut jobs to focus on their AI-driven businesses. Vroom would axe about 800 jobs, according to the US-based online used car marketplace's regulatory filing last week, as it plans to focus on automotive financing and AI services and close its e-commerce and used vehicle dealership businesses. Earlier this month, media reports said Duolingo would cut 10% of its contractors, as the language learning app moves toward using AI to create content. Mass layoffs began in 2022 and extended through 2023 as global macroeconomic headwinds, such as high interest and inflation rates, caused consumers to pull back on spending amid uncertainty in the global economy. Embattled bank Citigroup said earlier this month that it was cutting 10% of its workforce. And on Thursday, Levi Strauss said it will lay off at least 10% of its global corporate workforce as part of a restructuring. Paramount became the latest media brand to announce cuts, with CEO Bob Bakish saying on Thursday the business needs to operate as a leaner company and spend less. Within tech, a wide variety of companies, big and small and spanning the consumer and enterprise markets, are eliminating jobs. At the large publicly traded companies, there's an intense focus on profitability, margins, and cost-cutting, said Tim Herbert, Chief Research Officer at CompTIA, which tracks trends across the tech sector. But, he added, there's an enormous base of small and mid-sized tech companies across the U.S., and that in some cases contractors, freelancers, and overseas workers are being hit particularly hard. However, Herbert echoed Zile in noting that there's not enough data to get too panicked about the activity in January. There's a lot of nuance to the data, so we always want to be a little bit careful not to read too much into it, Herbert said. We don't want to ever get too hung up on just 1 month of data, or even 2 months of data. While investors will get a clearer picture on the near-term outlook for business and consumer spending and tech earnings announcements next week, the latest macroeconomic reports provide some reasons for optimism. The economy grew at a faster than expected pace in the fourth quarter, and inflation cooled over that stretch, the Commerce Department reported Thursday. Gross domestic product increased at a 3.3% annualized rate in the quarter, topping the Wall Street consensus estimate for a gain of 2%. Meanwhile, consumer prices rose 2.7% on annual basis in the quarter, down from 5.9% a year ago. Inflation has been easing from its pandemic-era peak in mid-2022. The market has been rallying as investors see those key numbers leading to the likelihood of Federal Reserve rate cuts in 2024 after the central bank lifted its benchmark rate 11 times in less than 2 years to fight inflation. Vaz said many corporate leaders are optimistic over inflation actually meaningfully starting to come down at the same time that spending is essentially coming back in so many sectors. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.